Hey everyone, Scott Smith with the Smith team at Keller Williams. Got a great video for you today, Friday, December 17th. I want to share some awesome market information. This is going to be a little bit longer video because we've got a lot of content to unpack for you, but I'll try and make it as quick and painless as possible if you can make it through the end. So I want to just share some information on what's going on nationally from activity, mortgage information, what's happening with pricing, the new construction activity, and also just some inventory trends and how that relates to you, hopefully, if making a move is on your radar. So just wanted to share a couple of those things with you. It's kind of a different video format where I'm sharing my screen and looking exactly like I did on my on our photo there. So here's the housing market update. What's cooking? A lot of different information. So here's a scoop. We've got some different market activity trends, housing market forecast, home price forecast, mortgage rate predictions, existing home sales versus new construction, and just some interesting facts about credit scores that I kind of sprinkled in there. So so showing time is a tool that the Board of Realtors uses. Many of the boards across the country use to kind of track the activity and how agents will schedule showings for different properties. So you can see we've actually had quite a bit of good activity this year. The activity per showing or per property has settled down a little bit as we kind of get into the fall months, which in Minnesota, Twin Cities, Minneapolis, St. Paul markets is normal. We kind of have the market settle down in the last quarter of the year as people are kind of settled in, kind of getting ready to move after winter. And then all of a sudden it takes off once we get into January, February, March. So nice visual just to kind of share with you on that. And then also kind of here's what's happening the last few Octobers, where we've actually seen more activity comparatively speaking to 2017, 18, 19, 2020. Our spring market was basically pushed out about 3 or 4 months, but we're pretty much right in line with where we were last year, which was a record year. So relatively speaking, good, strong showing activity. And what we find in the fall months that the buyers and sellers that are out there are more serious. So we definitely get more serious buyers, but fewer of them in the marketplace. One thing that we're always wrestling with in the real estate industry is any news outlet, newspaper, online, blogs. The headlines will sell. So we want to make sure that you're getting good information to share with you. So headlines do more to terrify than to clarify. So here's a screenshot from Realtor.com. It says housing foreclosures are shooting up. It's a repeat of early 2000s housing crisis. Well, it certainly was some good clickbait to look at. But the reality of what we're seeing is when you look at that, the housing foreclosures are up from 2019. Actually, they're down from 2019, 2020, and to 2021. The reason for that is most people now have a lot more equity. As we've seen the market conditions improve, average sale prices improve, lower interest rates, we've seen a lot more people in a good spot where they can avoid foreclosure. So just be wary of that. Don't have to share that. Mortgage originations, they're saying, are going to drop 33% in 2022 as interest rates rise, which really isn't the truth. What's going on? So they're actually saying it's going to drop, but originations for the purpose of buying a home are forecast to rise 9%, and a record $1.73 trillion in 2022. People want to take advantage of the low interest rates. That's the bottom line. So here's some slides that we get from our resource that actually grabs information from NAR, from Housing Economic Development, from Mortgage Bankers Association. They kind of aggregate it and share it with us as real estate agents. So they're forecasting mortgage rates on average of 3.3% in 2022, which is slightly higher than 2020, which everything was way down with that. Standards are still relatively low if you look at it comparatively speaking to in years past. So anything in the threes is fantastic. If you talk to someone that had a mortgage back in the early 80s, they're going to say, yeah, we had a rate that was in the teens. It's like buying a house on a credit card. So that is what is fueling our real estate frenzy that's going on right now. So this little chart here shows kind of where interest rates have gone over from 2018 on the far left all the way to 2020, 2021, and kind of into 2022, what we're expecting. So it's a gradual increase, which I think is going to be healthy for the real estate market. The reason for that is that those low interest rates, it's putting more pressure on the housing prices. And so if we can maybe edge those up a little bit, it'll kind of pump the brakes, so to speak, for a real estate market. So what's happening with home prices? Here's a number of different sources from Fannie Mae, Freddie Mac, Mortgage Bankers Association, Housing Public, and Zelman is an economist, and then NAR. What are they forecasting? So NAR, interesting, was the most conservative at 2.8%. This is nationally. So obviously all real estate is local, so how that impacts our local market will be interesting. But Fannie and Freddie are very strong and bullish, and I would say Zelman and NAR on the other end of it are a lot more conservative. So on average, historically speaking, any given year is about 4%. So 4 out of the 6 are predicting that we're going to have above average, and the Zelman forecast and NAR are saying that we're going to be a little bit more moderate. So, which again, I think is healthy as we kind of come out of 20 and 2021. So here again, how will it perform? Looking at how many units will be sold. This is one thing that's always relative. So we talk about there's no inventory out there. It's because there's so many transactions that are happening. So if you look at comparing 2021 and what they're forecasting for 2022, a lot more real estate transactions. And a part of that is going to be with new construction, hopefully playing catch up to help soften the inventory a little bit and absorb some of that inventory for buyers to take advantage of getting into a new home. So more transactions happen. Because it's going to be a little bit more normalized market, I think people will be jumping back into the marketplace with that. So on average, 6.5 million homes sold in 2020. And that was the full year of COVID pretty much. And there were still 6.5 million homes that were sold. So we're seeing a lot more of those transactions coming into the marketplace. So everything is saying that 2022 should be another strong year for the housing market. Hopefully it's not as crazy as it was earlier this year, 2021. I think we can continue at that pace. Last year, staying home became a necessity that caused many homeowners to have renewed gratitude for the roof over their head. Unless you start to go stir crazy with having kids at home in school and trying to work and work out, and you're getting a little bit going a little stir crazy with it. So I think people can appreciate that, but at the same time, I think they're probably realizing that they can't do as many home improvement projects, and maybe it is a good time to take advantage of low interest rates and that increased equity. So I think we're going to continue to see more people maybe stepping up for that next opportunity in their home rather than remodeling, because quite honestly, if you're looking to do a remodeling project, you're probably looking at anywhere from 4 to 6 months out for contractors that are really good. Interesting stat that they provided us: homeowners who feel emotionally attached to their home pre-pandemic, 58%. We kind of like our home. Now they're like, we want to be here because they've probably been there for so long. But as we've always known, buying a home is not just a financial decision; it's a lifestyle decision. So, but what people are realizing is their lifestyles have changed. People being able to work more remote, so they might say, you know what, instead of buying a cabin, let's look at buying a home on a lake. Looking at maybe different needs for kids doing school at home or working from home, gym, workout space at home. People are investing and taking a closer look at that. Also want to share with you, this is just a quick screenshot. We've got our winter buyer and seller guides. I got a couple copies of our fall buyer and seller guides for you. It's just got great information. A lot of the slides that we share are included in this. It's a free resource for our clients. If you're looking at something, certainly reach out to us. We're happy to give it. Just go right to our Twin Cities Living website, and you'll see a little tab for the buyer and seller guide. Great information. A lot of the slides that I'm sharing here today are right in that buyer and seller guide. So what's happening with sales? All right, so existing home sales, you can see that COVID, big fall off the cliff. Then all of a sudden we kind of got through that a couple of quarters, and then it took off, and then it settled down again. But we're on the right trajectory. But if we smoothed out that line, we would see that the real estate market continues to trend upwards. So in thousands of homes comparing 2019, 2020, 2021, and what is kind of predicted over the long term. We're seeing basically, in a nutshell, that 2021, a lot more sales happen. New construction back in the marketplace. The builders, if they could get more of the supply chain, they would and more labor, they would be building homes left and right. So we're definitely seeing that new construction boom. We live in Lake Elmo, and we've certainly seen that happening quite a bit. This is pending home sales. So the index is 100 as a baseline, historically healthy level. So you can see we've been going kind of at a breakneck speed for the last 18 or 20 months. And seasonality in Minnesota, we actually have a little bit of time to catch our breath during the winter months, and then it kind of takes off like a rocket as we get into the first quarter of the year. So what is happening with housing inventory? Percentage of distressed sales. So I touched on this before about foreclosures with a couple of those headlines. You think about properties or people that took advantage of having their home in forbearance, not being able to make a mortgage payment because they were unemployed or off of work, temporarily sabbaticals. And so what we've seen is the anticipation was that we were going to see, were we going to see a wave of foreclosures and those distress sales? And the reality is that didn't happen. So lenders and with some of the government strategies that they implemented gave people an opportunity to get back on their feet and take a breath of fresh air with that. So certainly not going back into 2012, 2013, 2014, more at a moderate rate. So months of home inventory, this is nationally. We always say that the real estate market is a healthy market, anywhere from 5 to 7 months of inventory. And obviously we've had a long standing downward trend with not a lot of inventory. Doesn't mean there's not a lot of transactions happening, it's just not a lot of inventory available. So multiple offers, but we're seeing that settle down a little bit. So we'll be interested to see how 2022 unfolds. New inventory for new construction, seasonally adjusted. You can see that we're at 5.7 months. Those builders are definitely catching up with that. This is kind of what, again, talking about mortgage rates and how that might impact the real estate market because it's affordability. If the financing is cheaper, we're starting to see that upward trend. So as we were in COVID, interest rates were really kind of down. We're trending back to where we probably should have been a while ago. So this is a great chart where we look at 4 different resources and what they're predicting for mortgage rates. So again, we're expecting that we're going to be in the mid 3s. And I've talked about this before. A 1% change in mortgage rates has about a 10% change in buying power. So that same house with a different interest rate will adjust or impact your monthly payment by about 10%, more or less, depending on if you're looking up or looking down. So it certainly has an impact. And that's, again, why people are taking advantage of the interest rates. Here's that slide again I showed earlier, where we're expecting interest rates to go and stepping up gradually. And I think that's a healthy thing. It's a good spot to me. This is one slide that I wanted to include. It's kind of a little bit off topic, but it does talk about FICO scores. So people say, yeah, we've got great credit. But what's interesting is you look at 46% of people have a credit score under 750. Obviously, 54% have that credit score that's north of that. But having a strong credit score, banks are looking at, if you're really in that A range, if you are a 700 or greater. But banks are actually looking at their underwriting guidelines and looking at people if they're putting more down payment, that they're actually going to be able to lend them money. With maybe a little bit of a bump in interest rate, the higher credit scores are going to get a little bit of a discount on their interest rate as well. So thought that was just an interesting slide to share with you. Another reminder about those home buying and selling guides. If you know of anyone that's looking at that, we could certainly email it out to them. It's about 40 pages of just great content information about tips on buying a home, preparing your home for sale, and what you need to look at preparing for the next step in your housing journey. So wanted to share that with everyone. Wishing you a happy Friday. We've had some crazy weather this week, and with the warm temperatures and the snow last weekend, and we'll see what the next week holds for us. But wanted to wish you and your family a Merry Christmas and a Happy New Year, and hopefully this information was helpful for you. So take care and reach out to us if you need any help. Thanks. Bye now.